And in our top business story, venture capital investments across the Middle East and North Africa region tripled in 2015, with the UAE recording the highest number of deals. The growth in venture capital investments was driven by evolving technologies and an entrepreneurial ecosystem, according to a report on the industry launched on Sunday by the MENA Private Equity Association. In 2015, disclosed transactions rose by 122, reaching 175 compared to 2014. However, the value of disclosed investments decreased marginally to $1.49 billion from $1.57 billion in 2014. The report was launched in partnership with Deloitte and Zawiya Thomson Reuters and sponsored by Dubai International Financial Center. It noted that fundraising in the region remained challenging due to economic headwinds, geopolitical factors, and the absence of a track record for some players. The number of funds raised during 2015 stood at 12, with 3 funds in excess of $100 million. The report said consumer goods, including retail and information technology-related sectors, dominated investment activity by volume in 2015, accounting for 30% and 15% respectively. Deal trends seen in 2015 are expected to continue in 2016, with fund managers continuing to indicate a strong preference for consumer-driven defensive sectors, which, according to the report's authors, are likely to provide further opportunities to deploy capital effectively. Saudi Arabia's central bank has told banks that it is banning the use of options and other derivatives to speculate against the riyal. According to reports, the decision is part of a new effort to reduce pressure on its currency peg, although non-speculative trade in the riyal forwards market will still be allowed. The report added that in January, commercial bankers in Saudi Arabia were contacted by the central bank and were urged not to conduct derivatives trades against the riyal. The central bank has also been asking banks for information on their trades. The government is expected today to announce details of a reform plan designed to reduce the economy's reliance on oil. The wider reforms are expected to include subsidy cuts, tax rises, sales of state assets, a government efficiency drive, and efforts to spur private sector investment. Last month, the International Monetary Fund said the plans were appropriately bold and far-reaching. Officials from Abu Dhabi's Department of Economic Development have predicted that economic growth will accelerate next year as the Emirate seeks to revive some delayed projects, including a plan to build a branch of the Guggenheim Museum. The Emirate, which sits on 6% of global oil reserves, plans to award contracts for the museum by the end of this year or early in 2017, according to a report quoting Ali Majid al-Mansouri, the chairman of the Department of Economic Development. The Guggenheim will be located in the Emirates Cultural Hub on Saadiyat Island, along with a branch of the Louvre and the National Zayed Museums. Mr. al-Mansouri, who is also a member of the Abu Dhabi Executive Council, stated that Abu Dhabi's budget is still strong and expects growth to expand as much as 5% in 2017 from about 2% this year. The Emirates' credit rating was also maintained in May at Aa2 at Moody's Investors Service, citing very large fiscal buffers. According to a new Baith.com Ramadan in the Middle East workplace poll, a majority of MENA professionals at 86.8% agree that Ramadan is one of their favorite times of the year. More than half, at 53.7% of MENA respondents, feel that they socialize more than usual with their colleagues during Ramadan. In keeping with a heightened morale and more sociable atmosphere at work, a slightly higher percentage of 56.3% of MENA professionals believe that there is a noticeable increase in the company's charitable activity during Ramadan. With a favorable workplace atmosphere during the holy month, responses are fairly evenly split when it comes to taking time off from work. 53.7% of respondents say that they do not take time off during Ramadan, and 46.3% say that they do at least occasionally. Similarly, just over half, at 56.9% of the respondents, travel on the Eid break, while the rest, at 43.1%, do not. Data for the 2016 Baith.com Ramadan in the Workplace in the Middle East poll was collected online from the 17th of May to the 29th of May 2016. Results are based on a sample of 3,660 respondents. Countries that participated are the UAE, Bahrain, Algeria, Egypt, Iraq, Jordan, Kuwait, Lebanon, Libya, Morocco, Oman, Tunisia, Qatar, and Saudi Arabia, as well as Yemen and others.